All right, everyone, I'm back with Michael Kovacs. Long time no see, my friend. Thanks so much for coming back. And today we're going to talk about the healthcare sector. This is a sector that Harvest
Mhm.
specializes in. Your biggest ETF is HHL, I believe, still to this day,
Yes,
with 1.5 billion in AUM. You also have HHLE, I believe, that the leverage
Mhm.
version as
Correct.
well. And then we're also going to talk about HPYT, which is the Harvest Premium Yield Treasury ETF, which basically invests in long-term US government bonds. That one had a distribution reduction. I've been getting some questions about that, so we'll talk about this
Mhm.
right in this episode here. So let's start with the healthcare sector. What is
Right.
going on in the sector? It has been declining a little bit lately. What's Harvest thoughts on it? Because I know you guys follow the sector.
Yeah. Well, you're right. It is our largest fund, and it is a large cap, diversified healthcare product. It's got everything from medical supplies to health insurers to big pharma, medical medical equipment. It's a very diversified product, and even companies like Eli Lilly, which we all know with the GLP-1s, the weight reduction drugs, it's become very popular as well. It's a great product, and I guess it was probably around before the election in the United States, we started seeing some chatter about healthcare. We saw, unfortunately, the assassination of the uh, um, healthcare executive,
Yeah.
um, United. So all of these things started happening, and sort of, I guess, creating doubt around the healthcare industry. And we've seen a steady sort of sell off in these names. We're now at a point, and it's very interesting. We're at a point where the discount in healthcare is similar to where it was in 1994. I mean, that's how
Wow.
much it's sold off that much. Um, we actually think it's probably a great buying opportunity here. I mean, we start getting when that fund's gotten down to that $7 range before, it's been a great opportunity. Wasn't that long ago, it was pushing back towards $9. So we've just had a sell off. The sector's out of favor. Could be out of favor for some time. We don't know. But it's these companies are not going away. Um, they're great businesses. They're providing a superior service. People need their health care. It's a very complex industry. It's not going away. It's just under pressure. And we think it's an opportunity because of where the valuations are now. And from the standpoint of the distribution, we have no plans to change that. We have no plans to cut the distribution. It's been steady for 10 years and it's going to remain like that.
Okay, perfect. That was going to be my next question, the
Yeah.
distribution. There's no danger of the distribution. I mean, these are big caps, so I'm assuming maybe it's even easier because the volatility is a bit higher. But HHL is over 10% yield right now,
Mhm.
and then you have the leverage version HHLE, which is actually
Mhm.
in the near the 13, over 13.
Yeah.
So no plans to reduce distribution or anything like that for the time being.
Yeah, no plans at all on the horizon. We're
Okay,
going to maintain it. It's going to be steady, and we'll get through this downturn we have before.
sounds
So,
good.
what's interesting is healthcare. When the industry or the sector turns against healthcare, it can be very brutal. We saw that happen. It's happened a few times. It's usually around election time. It happens, and I think about back when Obama got in, there was a lot of discussion about sort of nationalizing healthcare, and the healthcare sector got hammered. And it's tripled since that time. So, you just have to if you feel comfortable with what you own, and these businesses,
Yeah.
then you take an opportunity to accumulate more.
Yeah, no, for sure. And these
Yeah,
are no small fry. These are the big
yeah,
cap companies, and it's also you have diversification within the sector as well. It's not just the pharmaceuticals, which tend
yeah.
to be a little bit more higher volatility. It's also the companies that do the devices and things like that, which are,
It's an
you know,
easy target.
yeah,
Healthcare is an easy target for politicians. It always has been. It's a lightning rod, and it's easy to go after. A multi-trillion-dollar industry, which is
mm,
what it is. It's a big business, and it's a global business.
yeah, yeah. And so are the companies in those ETFs as well, right? You got
Mhm.
global exposure there, not just the US.
Right.
Speaking of politicians, HPYT, the Harvest Premium Yield
Yeah.
Treasury ETF, which invests in a portfolio of long-term U.S. government bonds. The biggest one, of course, is TLT, the biggest, the
Mhm.
most liquid one that many, cover call ETFs write their options on. So this one, the distribution was 15 cents
Mhm.
for, since the beginning. And then you guys had to reduce it. You reduced it in
Mhm.
a couple of months ago to 13 cents. So can you explain why that why that happened?
Yeah, absolutely. It's I mean, it was a tough call to make, but and we ran the fund at the 15 cents quite a long time. But when you go back and look at what's happened in the long bond, talk about TLT,
Hmm.
uh, it's been hit very hard. But that's just a reflection of the big uptick we had in interest rates in the United States. And, it's they came out, rates ticked up a bit, then it went back down, then they rallied back up again, and all the sort of what are the worst case scenarios that could happen happened. I mean, we've seen rates still being held up in the United States. So that
Yes.
pressure, especially at the long end of the bond market. So we got to a point where it's more relief to the fund to reduce that distribution a couple of pennies to let the NAV have more recovery ability as opposed to just continue to rate at the maximum level and pay out everything you're earning.
Yeah.
So it was a tough move to make because we don't like reducing distributions and we haven't in the past, but this is one that we had to make that decision.
Did
You're
volatility go
talking
down
about
as
bonds,
well?
right? Pardon me?
Did volatility was volatility a factor as well? I mean, this is usually not volatile stuff, but
Yeah.
did the volatility go down as well? Was that also a factor?
Volatility came down because the whole sort of, I think I had this conversation before, when a sector goes down and then stays down for a long time, and then the volatility sort of resets at that lower level.
Hmm.
And that's what a similar thing that happened here. We will at some point see the rates start to tip back in the United States. But I mean, this morning, the reports out of the United States that the consumer's in pretty good shape. The economy continues to sort of bubble away, regardless of what the president says. Things continue to sort of do well in the states, so that keeps pressure on those rates to sort of stay higher. So
Yeah.
we see that we could sit there for a while. When we launched that fund, we really were of the opinion that we were probably going to see rates start to tip down in the United States, and they started to, and then they came back up.
Yeah.
So it's
Do-
it's it's been disappointing. We're not happy about it, but we think it's better off for the fund to have less of a nut, if you will, to hit every month.
Yeah, I think President Trump is also very, very disappointed in we all know who.
Yeah. Yeah.
I think there's plans already to replace the Fed, the Federal Reserve. Do you think, everyone is of the opinion, look, they're coming. We just don't know
Mhm.
exactly when. Then there's like the odds of interest rate cuts. When is it going to happen? We know it's going to happen sooner or later. Do you think it's going to be a positive for a fund like this one, or for TLT basically?
I think it will be. I think it just depends on how much the long rates come down. Sometimes the shorter rate comes down, like in Canada, we saw a real drop off in the short-term rates. I mean, if you look at these cash funds, they've gone from 5+% to 2.5%. You've seen a 50% drop in interest rates in Canada on the short end. The longer end, not so much. We have to see that happen in the States as well. We need to see their longer end sort of come down. So the shorter end, reverse it. The shorter end will come down first, and then the longer end will sort of follow after that. So that could be starting later this year. It may not be until next year. We just really have to see how the economics of the numbers are coming out.
Okay, sounds good. So to everyday investors who are in this and might have that has concerns, for example, that maybe it's going to get cut again or whatever, what would you just say in general to that investor?
Well, we cut it 2 cents, which is what, 24 cents a year. So that was a pretty big cut. So I think we're going to hold on to that unless we see this continue on for a substantial amount of time. Um, I would just say if you're in it and you've been in it this long, just ride it out. It's unfortunate that it's come down this much and that the rates had to be cut, but um, it's the quality of the underlying portfolios there. It's just the long rate. We need to see that lighten up in the States.
Okay, sounds good. I think you've answered everything. We talked about the healthcare sector, HPYT. Honestly, you've been great. You spent a lot of time with us, even in the last Q&A, talking about HHIS and
Mhm.
HHIC. So really, really appreciate it. Looking forward to seeing you in person, by the way, at the
Yeah,
Blossom Toronto event, which, in case people don't know, I think Harvest is the main sponsor of the event. So are
correct.
you actually going to be there?
I will be there.
There you go.
Yeah.
So
I
everyone
get a
who's
few minutes
interested
to,
in,
I get a few minutes to address the crowd too. So,
oh, cool.
yeah,
That's awesome.
yeah.
So since there's many fans of and watchers of mine who are fans of Harvest. So this is the
Mhm.
opportunity, guys. You could check out Harvest. They will be at the event. I will be at the event too as
Yeah.
well. I'll be at the Montreal and Toronto one.
Hmm.
So it'll be fun. It'll be there's gonna be a lot of people there. It's gonna be cool. So looking forward to it.
Yeah, they're having it at the Rogers Center, which is going to be, a great spot to have it.
Yeah, for sure. All right. Well, thanks again, Michael, for your time, and can't wait for you to come back on the channel. Looking forward, of course, to all these new products coming out from Harvest. Take care.
Thank you very much. Take care.